All right, let's get it. It's time for the end of day watch list report with yours truly, Dex the Algo Capitalist. I hope you all had a great day. As you know, tomorrow is Friday. It's Take Back Friday. The question is, will we really have a Take Back Friday? Or will it be, humdrum, quiet, dull? Well, there's a lot of flip flopping going around here. The Bitcoin futures and the Ethereum futures are trying to find its footing. Then you have the stock indices that are mixed. They're trying to find their footing. And then you have gold and silver. They're trying to find their footing. And that's what you got going on here. You got consolidation in the market. Now, even with a consolidated market, there is bias. In a consolidated market, the trend momentum reading has less of an impact. Instead, the bullish and bearish algo shifts take precedent. It's not until your algo shifts fall off that the trend momentum reading comes back into focus. So that is a lesson learned when you're looking at your reports. Now, we do have all of the reports up on your dashboard right now when you log in at postwavetrading.com. You will see the attack reports there. And of course, these video segments focus on Dex's watch list, which is my personal watch list of things that I normally trade and operate in. All right, so the first chart here is Theta. Theta is consolidated here after the crash alert. You got your initial downside progress here in production, but the market is kind of taking its time. So you still got the bearish trend momentum reading, and therefore we're expecting sideways to lower prices. Next, you have the ZEC Zcash still in a locked-in bear market with a bearish trend momentum reading. We're expecting the price action to go down. Next, we have XRP Ripple, bearish trend momentum reading. Therefore, we're expecting price action to continue to move lower. Then we have the silver market, which exploded today, a day after giving you a negative bot check. What is going on here, people? This is a rarity. This is a very rare occasion to get a negative bot check and then the next day to get a monster rally. That just doesn't happen. It does not happen. It happened today, though. Therefore, let's see what the market has in store. You still have a bull market, yes, but it stopped being in correction mode today. On the close today, we stopped being on the correction mode. You still got a bearish trend momentum reading, and you still have a bullish algo shift. So this bullish algo shift remains. The algo shift is in effect. That's what's propping the market up like that. That's what's causing the rally, because you have a bullish algo shift. Once this algo shift drops off and the bearish trend momentum reading remains, that's when the sell the rally will be back on. But for now, you're seeing profit taking by shorts. Are they being squeezed? Are the bulls coming in and adding pressure? That's what it's looking like, right? Now, if you look back, your initial crash alert was back here. Price action has made it back now. So when you came in and took out the support and then took it out even lower, bears started taking profit here. And then when we got this negative bot check, then the market explodes. Very interesting turn of events. So the question is, how long will the algo shift remain active? But that is not the real question. The real question, if you are long silver or even short silver, is what happens when the algo shift falls off? I'm going to show you what normally happens. Take a look back here. Bullish algo shifts. Bearish trend momentum reading. The day that it came off gave you a crash alert, and then the market headed lower, taking out all prior supports. That's what happens when the algo shift comes off during a bearish trend momentum reading. That's what you get. That's what it looks like. Okay. So, bullish algo shift is in effect still. Longs are carrying the day. Market made it past the $28 mark. All right. That's what you needed. Now it's going to need some consistency. It's going to need to do it again. All right. So on Friday, we need to do this again. If it pulls back immediately, then that's not good, because then we're probably going to get another crash alert on Friday, depending on how this market moves. So we'll see. It could go either way. This bearish trend momentum reading can fall off tomorrow and turn green again. If that happens, then all bets are off. Silver's going to 30, maybe 35. Okay. So this is getting people excited. Silver is finally getting people excited. And for good reason. You're in a bull market. Yes, your bull market had a correction, and it appears so far that the correction is solid. It's solidified that your bull market is strong. It's not a fluke this time. It's looking to be the real deal this time. Look how long the market consolidated. All right. It consolidated for an entire year. And then now it's saying, I'm here. So this is exciting to see. Are we going to run? Are we making a run back to 50? Is it even possible? Is it possible? I don't know. But we're about to find out, though. Now, another interesting thing here is that yesterday, when we got this bot check, the algo shift had dropped off. And then it put itself back on today. So this is a very interesting turn of events. We're going to be watching this diligently. Next, we have the Dow futures. It also has bullish algo shifts going on under a bearish trend momentum reading. And we still stop short here at the top of the Kumo cloud resistance zone. So the question is, can it push through? Are we going back to 40K in the Dow? Are we going to say that a successful correction happened and now the market is ready to run? Or are we going to see, how the charters like to say it, a head and shoulders pattern? Are we about to come up here, fail, and crash? Because that's what it would mean. If you're going to complete the pattern, you come up, make the next shoulder, and then you do this in reverse. And that would take the market back down to the low 30s. All right. 31 to 32,000. Are we about to see a possible 7,000 to 8,000 point collapse in the Dow? This is very telling up here. We're going to need, for this market, if this is a real strong bull market, saying, look, I am a real bull market, all right? I am legitimized, okay? I'm verified. I'm going to come back up to the top of the Kumo cloud and run beyond 40K, taking out the 52-week high. If the Dow does that, then by no doubt, if it keeps going and it does not do the shoulder, then we are going to 100,000 Dow. That's just a fact of life. That's just what it is. We're going to 100K. Like, for real. Like, by the end of this year, all jokes aside, all things being equal, by the end of this year, at minimum, we should be looking at a 50K Dow. The Dow should close at 50,000 plus by the last trading day of 2024. All right, that's where this is headed if we don't do a head and shoulders, right? If this shoulder does not come into fruition and go like this, curve down, then this thing is blasting off and it's going to 50K and then eventually 100K. All right, you've heard it here first. Watch your Dow over these next couple of weeks. Next is the NASDAQ 100. Same type of a concern, all right? Are we going to shoulder here and then do this in reverse? Are we going back to 14K in the NASDAQ or lower? We had a crash alert coming into today. You didn't get any downside production, but that alert is still activated. And you're still in the Kumo cloud, and it's narrowing. And the closer you get to the vortex, a severe breakout or severe breakdown is imminent. That's why this is called a vortex. That's what happens in an algo chart. That's why this area is so dangerous. Because if you fail at that area, it's game over. You cannot fail at that area, or it's a wrap. All right. So either we're going to take off and we're going to see Dow 20K, NASDAQ 20K or 25K, 30K, or it's going to fall through the floor. Either or. Are we going to 52-week highs or are we going to see 52-week lows? We're at that crossroads. The next couple of weeks will be paramount, folks, in your U.S. stock indices. Next is gold. Now, gold is having a little bit different issue. Now, gold has been in a bull market for a while, right? And it consolidated for a couple of months back here. We really didn't go anywhere, right? Then all of a sudden you exploded. Now you're in that consolidation phase again. It's kind of doing the stair step. So here's the floor. Then you put your first stair up. Now you're flattening out, and it'll do that for a while. Then you'll break out again. That's kind of the wash, rinse, repeat pattern that we're starting to develop here. You had the negative bot check, but you didn't get quite the rally like you did in the silver today. But nevertheless, you've stopped the corrective mode, but this negative bot check still holds just like it does in silver. But you got the negative trend momentum reading, and you still have the bullish algo shift to continue with. So as long as the bullish algo shift is active, it will keep the prices level at least and keep the prices from falling down in theory. All right, in theory. So we'll see who wins, the bulls or the bears. Right now, the market's sideways. It's not doing anything. It's not going anywhere. It's not going up or down. It's just in a very tight trading range. All right. And we can see this for the foreseeable future. Technically speaking, this thing could drag out sideways well into the end of June. So let's see what happens. Next, we have the E-mini S&P 500. We got back-to-back negative bot checks. All right. And you're in the Kumo cloud of consolidation and confusion. And you're coming up on a vortex just a couple of weeks away, like 2 weeks away. All right. This is a problem. Got to cross this area, got to cross this Rubicon, just like you got to do in the NASDAQ and the Dow, or else we're going to do a shoulder. And notice where the shoulder collides right on time with the vortex, folks. Come on. This is going to be hard. It's like a suction. It's like a vacuum that sucks prices in. If that happens, hello S&P 4100. Hello S&P 4K. All right. 1,200 point collapse in the S&P is a potential at this point, ladies and gentlemen. So either we're going to see the 52-week highs taken out, or we're going to see 52-week lows. One or the other is going to happen, and you got 2 weeks, and that's all you got before it goes down. Pun intended. Crude oil. Crude oil has decided that it is put in a floor. or is attempting to, and it's giving us a rally alert for tonight into tomorrow's trading. It's still at a very tough resistance zone, being right here at the bottom of the Kumo cloud resistance. It's still in a corrective phase, but now you have a bullish trend momentum reading. If this market cannot make it back into this cloud and north of the cloud and remaining below cloud, it's going to put a lot of pressure, and it may keep the prices elevated and consolidated for a while. But eventually, once this bullish trend momentum reading falls off, you get back bearish again, then you head lower, you're going to take out 70K and then hello 52-week lows. So this market has a lot of overhead resistance zones. You got the bottom of the Kumo cloud resistance. We'll just call it $80, all right, for now. Then you got the top of the Kumo cloud at 82. We'll just say $83, right? And then you got the old resistance highs up here to contend with at 87, all right? So you got some things to work through in your oil. And this could drag on sideways, like I said, until the end of June, going into July almost. But this vortex is right here. So you got a little bit more time in this market than you do with the stock indices. This looks out to be about a month. So you got about a month here, about 3 weeks to a month or so before you hit this vortex. All right. So something to think about in the oil there. Then in the euro, we have a locked in bear market, bearish trend momentum reading, bear market, orange bars. I mean, what else do we need to say? And you got a negative buy check here. So this market's going nowhere but down. Next, the pound sterling is not in a bear market. It's still in a bull market for now. But you got a crash alert for tonight into tomorrow's trading, and the market has decided that it's ready to now put in the next down leg. So the pound sterling is definitely in play to the downside now with this bearish trend momentum reading and crash alert. Then you have the Aussie, still has a bullish trend momentum reading, but you have a bearish algo shift. So the two are battling north of the Kumo cloud. Right now, I will give the nod to the bullish trend momentum reading, even though this is technically turned off when you have an algo shift active. But because it's happening above the Kumo cloud and price action is staying above the Kumo cloud, you have to say that this the bulls are winning. They're keeping the market elevated and consolidated. They're not letting it go down. So the bearish algo shift is not really having a direct impact on the Aussie dollar just yet. You do have a floor here at this 65 cents and 66 cents. So 65 and 66, that's a 100 pip trading range of support and resistance right now. The floor is 65, resistance is 66. All right, that's kind of where you're working right now, just so you know that. And then, of course, hard resistance is at 67. That's a really tough nut. This 67 goes all the way back, folks. Look how far back it goes. Every time the market gets above it, it cannot sustain it. Gets above it, cannot sustain it. 67 is a hard resistance for the Aussie dollar. Next, we have the Russell, my hustle. Now, the Russell is in the Kumo cloud of consolidation and confusion, and it has been the weaker of the indices, but it has managed to claw its way back up also. Now, the pattern here is not as, pronounced as the other stock indices, but it's still here nonetheless. This is your long arm of the law. This is your shoulder. Are we going to create another shoulder? And look, with the Russell, it only has about a week and a half. This is not even a full 2 weeks here. This is a week, folks, a week and a few days, and then it hits its vortex. Is the Russell about to lead the stock indices back lower once again? Technically speaking, you could shoulder out right here and just dip. You don't have to go any higher. You could shoulder out right here and dip. And then this here, this pattern would play itself out to the downside. Hello, 52-week lows in the Russell. So either the Russell is going to get out of this and rally and hello, new 52-week highs, and the Russell's going to 3K, or hello 52-week lows. These vortexes that are coming up could be quite telling and compelling. Is this the sell in May, go away alarm? It's looking like it has the potential to be that, folks. It's looking like that. To quote from Mad TV, he looking like a man. All right? This looking like a bear market in the making. We have a lot of work to do, you bulls. You're going to have to get this market above the Kumo cloud, and it's going to have to stay there. If not, say hello to my little friend. The vortex is going to take you to the 52-week lows. Don't shoot me. I'm just a messenger. Next, we have the Ethereum futures. All right. So we still have a bull market. See the little bull here in the corner. And we still have the bullish trend momentum reading. But you're below the Kumo cloud. And you're in correction mode. What say ye? You're consolidated too. Now, this is interesting because you have two issues to work through. First, you have a consolidation bar here, okay? The high and the low is your range for consolidation. What the market has done, actually, technically, is create another leg down or extension of the consolidation. So now the low of this yellow bar here and the high of this yellow bar here is now your trading range. That is a long trading range, a wide trading range. All right. You're looking at like a, what is that? 500-point trading range. That's deep. That's crazy, right? So that's the potentiality that we're dealing with. Now your Ethereum, it has a 2-week window. All right, we'll give you 2 weeks. All right, before you hit this vortex. But here's the thing: it's already below the Kumo cloud. So when the vortex comes, it has the opposite type of an effect. In a bullish scenario, when you're trying to avoid getting sucked into the vortex, it's different. In the bearish one, you could get sucked up here and it could turn bullish on you, crushing all the bears and squeezing them out of the market. The vortex cuts both ways, folks, to and fro. When you're up and you're coming across a vortex and you're, close to the cloud, you run the risk of getting sucked into the vortex, and that's all she wrote. But in a more bearish scenario, it's the opposite. The closer you are to the Kumo cloud, you run the higher risk of getting sucked up into the vortex instead of down into the vortex, up. So the risk is to the bears within the next 2 weeks. So if you're shorting the Ethereum over the next 2 weeks, this is your risk that the market could explode on you. Okay. So that's how these vortexes work. All right. That's in a nutshell how that works. So where do we go from here? Well, you're in a locked-in bull market. Regardless, it's still a bullish trend momentum reading and a bull market. So regardless of what the price action does, we're expecting the prices to go higher. Now, the only caveat for your Ethereum is that we have bearish algo shifts activated. Okay. Back here, you had some bullish ones when you had a bearish trend momentum reading. And now you've got bearish ones under the bullish trend momentum reading. So what this typically means is that you're going to consolidate. You're not going to crash and you're not going to rally. You're just going to consolidate and ebb and flow within this extraordinarily large trading range. That's typically what that means. I say typically. Doesn't mean that it has to be that way. It's just typically. All right. So we'll see. We'll see where it goes from here. But you're still in a locked-in bull market. But it's in a corrective state. Can it head lower? Absolutely. This bearish algo shift, can that make the prices go lower? Absolutely. Is it threatening to take out this support? Absolutely. Is this support right now in play to be taken out with these bearish algo shifts? Absolutely. Absolutely. Yes. The answer to that question is Yes. Yes, yes, and yes. All right. So you got to watch for that. All right. These got deactivated once you got the crash alert. That's why you didn't see any more bullish algo shifts. Because then you got a rally alert, and then now it's just got negated again by the down pressure. So you're just flip-flopping around up here. And I don't expect this market to really go anywhere per se. But as long as the algo shift is activated, that has the possibility. I say the risk is to the downside right now in your Ethereum futures. Bitcoin futures is a little bit different. We don't have any algo shifts. We have a bearish trend momentum reading in this bear market. You had a rally alert right here. You got upside production. It gave you another rally alert. Then the market said, you know what? Nope, I'm ready to pull back. So it gave you a crash alert, canceling out that rally alert, and then it gave you downside production. All right. But within the grand scheme of things, you're consolidated here too. Yellow consolidated bar here, yellow consolidated. Now, these yellow bars are not necessarily always consolidation bars. They are when the market's consolidated. They're not if the market's not consolidated. So here you see you have it. You had one here. You had one here. Where the price action always comes back down, no matter how high or low it goes, it comes back into the range. And that's what happened here. So the market broke out and then came right back down into this here. Then it did the same thing here. It dipped down, but then came right back into the range here, moved sideways into the range, crash alert. Market comes down, then comes back up into this range here. And this is wash, rinse, repeat. So you're consolidated. And this consolidation can go on for probably 3 weeks or so, about a month, because the vortex is way out here in the Bitcoin. All right. And by this time, the market will probably have the higher risk of breaking out instead of breaking down. So just something to think about here as well. But the risk right now is to the downside in both Ethereum and Bitcoin for now in the short term. Okay, last chart is the US dollar index. US dollar index is still in a locked-in bull market, folks. Bullish trend momentum reading, bull market. We have back-to-back positive bot checks, no upside production yet. We know a big upsurge is due. It's overdue. Do we still have bearish algo shifts activated? Yes, we do. All right. That is putting pressure on the upside and making it difficult for the market to rally. Okay. So it's keeping the price action subdued. The battle is raging. You're consolidated. All right. You've expanded your consolidation. Consolidation bar here, expanded range here. So the high of this yellow bar, the low of this yellow bar, this is your consolidation valley where you are. But right now, the bulls are still favored right now because of the bullish trend momentum reading, bull market. Yes, algo shifts negate the trend momentum reading in the short term because they're keeping prices muted, keeping the price action impossible to rally, not letting it rally with the selling coming in. But once this drops off, if this is still green and the algo shift drops off, the markets explode. And then you have these back-to-back bullish algo shifts to boot. So once the algo shift drops off, this thing explodes. 108, 110, it's going to rocket. So be ready for that, folks. Be ready. Now, I know what some of you are saying, but Dex, aren't you being a hypocrite? With the stock indices, you showed head and shoulders patterns, blah, 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 but you're not holding the same philosophy with this dollar. And you're right. You could say this was a shoulder here. This is a guy with broad shoulders. I hear you. All right. He has broad shoulders. All right. So here's a shoulder here. Here's the other shoulder way over here. And he has a big old head. I hear you, right? Muscles in his neck right here and right here. And this pattern should play out right down here, meaning that here, dollar below par, here we come. You're not wrong. You're not wrong. That is very well a possibility that actually could happen. But the likelihood of that happening in the near term is 0 to none. There is no vortex here. If there were, then I would say, you know what, this is a big risk. It already got over it crossed the Rubicon here. The vortex was back here. And the price action did dip, but the bulls kept this thing alive and it survived. All right. It did not crack. It did not crack. All right. So can anything happen? Of course. As long as these bearish algo shifts are activated, that is a risk. But when they're white like this, these white bars, those generally just really cause the market to consolidate. The purple algo shift bars, whether they be bullish or bearish, are the ones that actually create market impact. So what you don't want to see is these white algo shift bars turn purple. If we start getting bearish algo shift bars, then all bets are off. The possibility of the market collapsing downward is a lot higher, like it did back here. See, they were white at first, meaning consolidation, meaning the market is topped out, short-term top, right? Meaning that the market can redeem at any moment. But here, the bears won out. Those white algo shifts turned purple, and it was all over. All right. That's what you don't want to see here. Now, if we start getting purple algo shift bearish bars, then then this pattern here will play out in, 52-week lows. Here we come. Okay. So that could be. All right. That could be. All right. So right now, you're in a locked in bull market with the US dollar, and it is what it is. And the price action is above the Kumo cloud. Yes, I know it's in a corrective positioning phase, but I don't expect price action to go anywhere until these algo shifts fall off. But until then, it's bullishness for your dollar, folks. And I know you don't want to hear that. I know, I get it. I really do. I promise you, I understand. But remember, we don't trade what we want. We trade what we see. And that is more important than anything else. So with that being said, I will holla at you on the other side. Have a wonderful weekend. You post waivers, hang on. I got to show you my order entries and my open positions for the weekend. And everyone else, have a wonderful weekend. We'll see you guys back here on Sunday. Peace.